I don't need any insurance, waste of money and only fit insurance pockets and their flashy cars. This statement does sound very familiar to Singaporeans' perceptions towards insurance. But what if there is a way to get medical insurance for almost free with minimal effort? Let's dive deeper in this topic coming up. Alright guys, welcome back to the Honey Money SG channel. My name is Christopher and today I'm going to talk about something very relevant to Singaporeans' lives. Insurance. Okay, but before we start this video, can we have a small disclaimer at the bottom here? This video is not sponsored by any organization or financial institution, and I'm not getting paid for doing any of this content. It is definitely my personal opinion and what am I going to do about it. So I do not sell or represent any goods and services discussed in this video. Thank you, and if you can give an early thumbs up to this video, let's move on. Okay, so as you know, everybody loves free things that they can get, right? But more importantly, they want to get free things that are relevant to their lives and can help with their expenses. So in one of my previous videos, I shared about the 4 tips that you should do before you start investing. You can check out the link over here. And one of the tips is to get sufficient protection before you even start to invest. So one of the most important insurance is actually medical insurance, which I'm going to talk about in this video how you can get it for free. As we all know, medical bills are super expensive in Singapore. So if we can, we want to reduce the amount of bills that we pay on the medical side without compromising our health. If you were to look at the hospital bed charges per night, you will know that it costs almost as high as a 5-star luxury hotel in Singapore. And your MediShield Life is definitely not enough to cover your medical expenses if you were to stay above the class B2, which is like the 6-bedder ward in Singapore hospitals. So I think the purpose of this video on one hand is to raise the awareness of medical insurance in Singapore. On the other hand, I also want to introduce a hack that every Singaporean and PR could use to fund their medical insurance. Okay, so if you do not have any sort of medical insurance, you can find a very good comparison in the MOH website listed here. So it compares almost everything about these medical insurances, be it the benefits and the annual premiums paid. And one good point about medical insurance in Singapore is that it can be fully paid by your CPF. To be specific, it is the CPF medical account, the MA, which can be used to fund your hospitalization and surgical plan insurance. Now the MA earns an interest of around 4% per year. So what we want to do here is we want to optimize the MA interest such that the interest generated year on year is enough to fund the medical insurance expenses. To put it more simply, the interest that you earn from your CPF MediSave account every year is enough to pay for your hospital and surgical plan insurance premiums. In this video, I'm going to use the example of Great Eastern A plan to elaborate how am I going to calculate this. Okay, so if you look at the brochure above, here is the Great Eastern plan and how much it costs per year. So optimally, if we gain a 4% interest on our MediSave account, this is how much amount we need in our MediSave so that we can get it for almost free. And note that this annual premium is specific to each age band. So if you are around the age of 21 to 30, this is your cost. And if you are around the age of 31 to 40, this will be your cost. So depending on your age band, you will need to determine how much amount you need in your MediSave so that the interest can cover the annual premiums. And in that way, you get almost a free insurance because the interest can definitely cover your premiums, especially if you are a young adult. Now, I do want to highlight a few pointers that you should take note when you are taking up this plan. The MediSave account can only fund for your base premium. It does not cover anything optional like your riders. What the rider does on top of your base plan is that it caps the amount out of pocket that you have to pay to the hospital when you incur medical charges. So if you were to take up a rider, do note that you still have to pay your rider in cash to your insurer. Next comes the topic of how to increase your MediSave account balance. Okay, so one of the ways that you can increase your MediSave balance is to voluntarily top up your MA via the CPF website. So you can top up your MA up to the annual limit of voluntary contribution, which is 37.7k, and up to the basic healthcare sum of $63,000 for the year of 2021. Also, one more good thing about topping up your MA is that it is eligible for tax relief. So if you voluntarily top up $5,000 to your MediSave account and you are in the income tax bracket of 7%, you'll save around $350 on your tax bill, which is enough to pay for your rider if your age is around the 20 to 40 age bracket. Okay, so other things to note about this hack. The CPF MA top up is irreversible, so it's a one-way go in and cannot come out easily. But you can definitely use it to fund your hospital expenses and also your insurance premiums, but definitely not your riders, which is an optional add-on. Also, you have to note that premiums for medical insurances will almost definitely increase with time. So that means that medical bills are only going to get higher and higher, and your premiums paid are also going to get inflated. And as you grow older, the premiums you paid for the higher age bracket will actually increase exponentially with your age. So you will need a higher Medisave account balance to generate enough balance to cover that premium. And also know that there are withdrawal limits in your Medisave account, so depending on your age band, you may also need to top up a little bit more to cover those premiums. One more thing, if you do not know how to voluntarily top up your CPF MA, you can check out my earlier video on topping up your CPF and how to do it. Just that this time you have to change from the SA to the MA. It's almost the same process. Okay, so wrapping up, I think this is a good way to actually get sufficiently covered for your medical expenses, especially how Singapore medical bills are so expensive. And it also requires very minimal effort. But do take note that these top-ups into your Medisave account is irreversible. So if you need more cash in hand, you may want to reconsider this strategy. Okay, so if you have enjoyed this video and have learned something new today, do like this video and share with your friends and family. And also subscribe to the channel so that you can view more content like this. Thank you for watching, and I wish you all have a great day ahead.